Gunjan, I was actually referencing some of the stuff in your pre-market notes. A lot of stocks are not just down 10%. Some of the most well-known high flyers that we've seen are down 20, 30, even more than 40%. So I don't know what that means. I don't know whether it was an early crack in the market or whether a lot of the work that needs to be done, moving things from weak hands to strong hands, maybe some of it's already been done.
That's right. I mean, the Nasdaq is already in a correction, but under the surface, it's so much worse than it looks. There are many stocks across the market with market caps of more than $10 billion that are already in a bear market. You know, those include behemoths like Disney, Salesforce, Netflix, Twitter. So people have been trying to figure out, what does the world look like 6 months from now, 12 months from now? And they've bailed on companies like Netflix. I mean, that after hours move down 20%, that's something you would see from a penny stock, from a meme stock, but we're seeing that in Netflix because people are saying, hey, growth moving forward isn't going to look like what we thought it would.
Julian, in looking through we put in a lot of articles to try to give us some, I don't know, some insight into what's going on. One of them that I saw from Barron's I liked because it was in the notes for you. It was the earnings season for technology might be just what the doctor ordered for these ailing stocks. I think that might have been written before Netflix. Is that going to be the case, or is it going to just be a confirmation of why they're down already?
Well, we've got to back away for a moment and get two things straight. Number one, a 10% correction in an average year is very, very normal. So people probably need to take a breath here because 2021 was not normal without not having that kind of correction. The other thing is what this shows you is that this earnings season is much more stock specific, okay? And what you're going to see next week are great earnings. What you saw today, overnight, is a company that's telling you that its growth trajectory is not what the market expects. And in an economy where you're going to grow north of 4% this year, a company that tells you that it can't grow to what the market expects is going to get punished.
There will be a disparity, and a disparity among the high flyers. And Julian, some of these tech stocks benefited from stay at home. Other tech stock, and they're going to be hurt when we go back to it. Other tech stocks are going to benefit from reopening. So there's no way to just look at it all in the same way. So you're saying it's, what'd you say? It's alpha versus beta? I don't know. We use the Greek alphabet for COVID variants. I don't think we should use it for the stock market.
Well, the phrase is stock picking. This is absolutely a stock picking environment, and the higher volatility and what is likely to be unfriendly monetary policy getting into gear next week is going to sort out the winners from the losers. And frankly, what you've seen is the sell-off for the most part in what we would call profitless tech. And the reason that it's spilling over into some of these larger names, which again are going to have great earnings next week, and probably are not going to talk, for the most part, about having challenges to their margin capabilities, it is just this idea that investors are rotating their preferences in a stronger economy from high multiple growth to value.
So, Gunjan, we were talking about Jeremy Grantham a lot, and I mean, literally, I can go back 5 years and I remember similar comments, but I also said I understand, and I think that it's possible this was a super bull cycle that does unwind. But do you think we're at a point looking at a possible 45% pullback in the S&P?
I think that's what everyone is trying to figure out right now. But as you mentioned, there have been so many calls for, hey, this bubble is about to burst. Didn't we hear that at the same time last year, right? When value was outperforming by the biggest margin in decades, people were looking at lumber prices, meme stocks, and saying, hey, this thing is going to crash. So I think we've had those calls for so long, and the market has been way more resilient than many people expected.